Coming up, the RBA board to split into two, the ACCC green lights a deal between Virgin and Qatar, and the ASX takes a breather. All the details next. Your daily 10-minute business and finance news wrap for this Friday, the 29th of November 2024. The Australian share market fell today, but only just by 0.1%. We'll have the details with Omkar Joshi from Opal Capital Management in a few moments. But first, legislation pushed through Parliament overnight for reform of the RBA, which includes a split of its board into two: a governance board in charge of the day-to-day running of the bank, and a specialist monetary policy board dedicating to setting interest rates. Now, this follows last year's RBA review, where some recommended changes have already been enacted. The number of RBA board meetings have been reduced from 11 to 8 per year, with a media conference now following immediately after. And the passage of the legislation now also means the RBA governor can consider others, like revealing unattributed board member votes and requiring members to speak in public at least once a year. For more, I spoke with economist Saul Eslake.
Well, the key change is really the institution of a monetary policy committee comprised of people with specialist economic knowledge to make decisions about interest rates and other aspects of monetary policy, as opposed to the current and long-standing, but by international standards unusual arrangement, whereby those decisions are made by a board comprised predominantly of people with business backgrounds and occasionally with backgrounds in the union movement, or in one instance, journalism, along with the governor, his or her deputy, and the secretary of the Treasury. And as the review of the Reserve Bank set up by the current government found, that's not only out of line with what's considered international best practice, but the review found that the board, as it's currently composed, doesn't typically have the skills or experience to test and challenge the recommendations and views put to it by the Reserve Bank officials and its staff in a way that does happen in most other advanced and developing economies. Now, that's not to say that a committee of so-called expert economists is going to get it right every time either. And central banks, which do have expert economists making decisions about monetary policy along with central bank officials, have made mistakes as well, including during and immediately after COVID. But I think the evidence suggests that a restructured monetary policy making body along the lines recommended by the review and now legislated by the Parliament would make fewer mistakes and hopefully produce better outcomes for Australians.
Are there anything that concerns you here? For example, the Treasurer today confirmed he'll appoint first-rate people to the new interest rate setting board, but the board also comes into effect in after the February board meeting, which is just before the potential election.
Yes, I hope the Treasurer lives up to his commitment to appoint what he's called first-class people. Markets will make up their own mind once we know who those people are. But as former Governor Glenn Stevens has said, who is appointed, whether it's to the board as it's currently constituted or to the proposed Monetary Policy Committee that'll start its work in February or March next year, that's going to be really important to the credibility of the new regime in the eyes of financial markets initially, but ultimately to the Australian people in terms of their ability to deliver stable inflation and full employment.
What kind of people do you think should be on that board?
Well, I would think, as the review recommended, people with expertise in a range of areas that are relevant to making monetary policy. Now, that could be people with experience in the making of monetary policy itself and the operation of financial markets, but it also ought to include people with a good understanding of the labour market, of some of the more interest rate sensitive sectors of the Australian economy, such as the housing market. And because interest rates interact with the currency in important ways, people with understanding of Australia's international trade and investment links, exports and imports, among other things. One thing that's unusual about the continuing structure of the Reserve Bank is the retention of the Treasury Secretary on the board. I don't think any other central bank in the developed world has a representative of the Treasury, or the Finance Ministry, as it's often called, on the decision-making body with regard to interest rates, although in some countries, Finance Ministry or Treasury officials attend the meetings. In countries where the voting patterns of monetary policy decision makers are revealed, such as the US Federal Reserve and the Bank of England, knowing how individual members have voted helps market participants and others interpret what they say in their speeches. In other words, for example, when someone who has a track record of voting in favour of tighter monetary policy says in a speech that he or she is worried about rising unemployment, that carries far more meaning in terms of what the Monetary Policy Committee might be about to do than if someone who's routinely voted in favour of looser monetary policy says she or he is concerned about rising unemployment. And so while it's yet to be determined whether the votes of individual members will be revealed, and as I said before, there are some potentially complicating factors with regard to the Treasury Secretary's vote, and if the Deputy Governor and the Governor vote in different ways, or if the independent members of the committee override the votes of the Governor, the Deputy Governor and the Treasurer, they're all things, the consequences of which need to be thought through.
Is there the threat that these changes could potentially change the path of interest rates in terms of when or how they're cut?
It's possible, depending on who's appointed and depending on how they interpret the economic data. I mean, the objectives that they're meant to achieve are pretty clearly set out in the Reserve Bank Act as it's been amended, and more importantly, in the written agreement between the Treasurer representing the elected government and currently the Reserve Bank Board. That will presumably have to be rewritten to be an agreement between the Treasurer on behalf of the government and the members of the Monetary Policy Committee. But, that's fairly clear that they are meant to achieve stable inflation around the midpoint of the 2 to 3% target band and sustainable full employment. And that's not unusual. Most central banks around the world are expected to achieve low and stable inflation, and many are also expected to achieve sustainable full employment, although that's defined in different ways in different countries. Different people with expertise in different fields of economics will probably have different interpretations of precisely how and how quickly those targets ought to be achieved, and will perhaps attach different weights at different points in time to inflation or unemployment. That does obviously happen under current arrangements as well, but hopefully those judgments and the discussions that lead up to those judgments will be better informed than they have been under the current structure.
What do you think ultimately got Polly's over the line with the government? I did read, for example, that Jackie Lambie contacted you for a chat.
Well, I'm on the record as supporting the changes that the government had proposed to the Reserve Bank Act and the way the Reserve Bank conducts monetary policy in the aftermath of the review. So, yes, I had a conversation with Senator Lambie about that. I'm a Tasmanian. She's one of my representatives in Parliament. I didn't see anything particularly wrong with that. And it was up to Senator Lambie to make public the fact that we had spoken. I'm glad she voted as she did. And I'm glad that the Greens came to their senses, backed down on what I thought were some ludicrous demands, and have seen their way clear to implement what I think is a sensible reform to the way monetary policy in Australia is formulated.
That's economist Saul Eslake there.
Now, Market Day on the SBS On The Money podcast.
The Australian share market took a bit of a breather today. The S&P ASX 200 down 0.1% to 8,436. For more, I spoke with Omkar Joshi, the Chief Investment Officer at Opal Capital Management. Omkar, the market is down today. Why?
I think it's really just a bit of a sell-off that we're seeing today, which is off the back of a very strong run. So I wouldn't read too much into it, and it's pretty natural and normal for a bit of a correction after a strong rally.
Okay, that strong rally, we've seen the market hit records consistently over the past few weeks. What's behind the positive sentiment?
So a lot of it was driven by the election result, where you saw a clear candidate winning, and you also saw both the House and the Senate going to the Republican Party. And so the fact that you had certainty, that's really what's driven a lot of the rally. It didn't really matter which way it went. It was more the fact that you've got a clear line of sight in terms of government. There will be change, there will be policies, and there'll be certainty on things getting done. And that's really what's driven it. I guess the other piece is Donald Trump is seen as more business friendly, and that ultimately means earnings from a corporate perspective should be better. Now, a lot of water to flow under the bridge, but that's all part of it.
It could be better, but what about for the global economy? There's a lot of talk about these import tariffs, particularly on Chinese goods into the US. NAB warning that the Australian dollar today could tumble to below 60 US cents if China responds, and this threat of a global trade war. What do you think?
I think the possibility of a global trade war is probably less of an issue than it was, say, last time. But it really comes down to what kind of Trump we see this time. Are we going to see a Trump that comes out with heavy tariff policies and really goes hard against those kind of things? Are we going to see a Trump that's more looking to make deals? It really comes down to what we see here, and that's very hard to predict. And I think it's a bit of a fluid situation. And so from that perspective, look, my view is I don't think we're going to see big trade wars and big tariffs and all the rest of it. I think they are more deal-making tactics more than anything else. And I think China is going to be pretty keen to actually cut some sort of deal and make some sort of deal and get some outcomes rather than just trying to have big trade wars. So I mean that's kind of where I'm sitting. Having said all of that, I mean Donald Trump is pretty unpredictable. So let's see what happens.
On interest rates, we've now seen ANZ push back its forecasts for the first rate cut from February to May. I think NAB said the same thing, and so has Westpac. Increasingly others. I think Shane Oliver from AMP also said the same today. What's the market thinking?
So the market is pricing in one rate cut in May, and the probability of a rate cut in February has declined substantially. So we're not actually pricing in even one rate cut by February. It's about half a rate cut. So realistically, that does mean you get one rate cut by May. We're really seeing it from the fact that you've seen core inflation has been stickier. Yes, headline inflation has come off, but core inflation remains sticky. And we've seen comments from the governor just last night as well, talking about the fact that it's probably no rate cut coming through in the near term. So until we get some more confidence that inflation is under control, we're probably not seeing a rate cut in the near term. Having said all of that, I wouldn't rule out February because things do change quite quickly. It's quite a fluid market right now. And we've seen the bond market pricing in rate cuts. They're not pricing in rate cuts a number of times. So it wouldn't really be a surprise if we do sit here in January and we talk about rate cuts again in February.
Who knows, right? The ACCC has given the green light for Virgin's deal with Qatar. What do you think this is likely to mean for Qantas?
I think at the margin, it's a little bit negative, but ultimately, I don't think it really changes a whole lot for Qantas. I mean, they've got a very strong business, very strong duopoly presence there between themselves and Virgin, and ultimately the domestic routes is really where they're making the bulk of their money. And I don't think that really changes under this. But look, ultimately at the margin, maybe it's a little bit of a negative.
And finally, where do you see the opportunities for investors at the moment? And what we normally talk about this time of year, right, is the Santa rally. Is that going to happen?
I think in terms of the opportunities, I'd say you want to be careful and aware of the global and the macro perspective at the moment, especially with Donald Trump coming in. We've already seen just the other day where he's tweeted about Mexico tariffs, Canada tariffs, China tariffs, and all of a sudden you've seen big moves. So I think you're going into a period of a lot more political uncertainty and a lot more volatility, really driven by tweets and what Donald Trump's going to do. And so from that perspective, you want to be more aware of that when you are thinking about individual names. Ultimately, there's always going to be good opportunities within that as well. So you've got to be looking around for different opportunities. And from a Santa rally perspective, look, we've already had a pretty almighty rally already. So maybe we do continue tracking highs simply because we are in that more certain, less risky period right now. And until Donald Trump really takes office, maybe we do continue to track higher. But I think the setup this year is a little bit different where we've already had a big rally. going into this period, as opposed to previous years where, we might have had a bit of a sell-off through October and November, and then we have a big rally into the year.
That is Omkar Joshi there from Opal Capital Management.
This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.